Fully detailed report. Wall Street's reaction to recession fears amid trade tensions. This is a Rethink report. Let's break it down. What just happened? The U.S. stock market is in decline after the Trump administration announced new tariffs on Chinese and European imports. Wall Street is now signaling rising fears of a recession, with key indicators flashing warning signs. The Dow Jones, S&P 500, and Nasdaq have all seen sharp declines. Manufacturing, banking, and small-cap stocks are hit hardest, showing major losses. Investors are moving billions into government bonds, a classic sign that confidence in the economy is dropping. This reaction suggests that traders believe these new tariffs could slow economic growth, increase costs for businesses, and potentially trigger a recession. What are these new tariffs? The Trump administration has imposed new import tariffs on goods from China and Europe, targeting industries like technology, smartphones, semiconductors, automobiles, European luxury brands, industrial machinery, construction equipment, factory parts, consumer goods, textiles, household products. These tariffs increase the cost of imported goods, making them more expensive for U.S. businesses and consumers. The White House argues that these tariffs are necessary to protect American manufacturing and reduce dependence on foreign economies. But critics say they could do more harm than good by disrupting supply chains and raising consumer prices. How has the market reacted? Investors and businesses are not optimistic about the economic impact of these tariffs. Stock market drop. The Dow fell by over 800 points in early trading, reflecting panic among investors. The S&P 500 saw a 3% decline, with tech and industrial stocks leading the losses. Banks and small-cap companies, which rely heavily on trade, have been hit hardest. Investors moving to bonds. The U.S. 10-year Treasury yield dropped significantly, meaning more investors are seeking safe assets rather than risking their money in stocks. A drop in bond yields is often seen as a sign that investors expect slower economic growth or even a recession. What are experts saying? Economic experts and financial analysts have mixed reactions. Supporters of the tariffs, mostly within the Trump administration, argue that the U.S. needs to reduce reliance on foreign imports to strengthen domestic industries. Short-term pain is necessary for long-term economic independence. The tariffs will force other countries to negotiate better trade deals with the U.S. Critics warn of serious consequences. The U.S. Chamber of Commerce warns these tariffs could cost thousands of American jobs. Major corporations are already warning of price hikes for consumers. If China and the EU retaliate with their own tariffs, this could lead to an all-out trade war, worsening inflation and slowing global economic growth. What are other countries doing? The international response has been swift and harsh. China's response. China has threatened new tariffs on U.S. agricultural products like soybeans and corn. Some Chinese manufacturers are cutting orders from U.S. companies, further impacting American businesses. European Union responds. The EU has called for emergency trade talks to discuss how to counteract U.S. tariffs. Germany's auto industry could suffer major losses, leading to potential retaliation. Will this lead to a U.S. recession? This is the biggest question right now. Reasons a recession could happen. Higher tariffs could increase business costs, leading to layoffs and slower economic growth. Consumers may spend less due to rising prices, slowing down the economy. If China and Europe retaliate, global trade could grind to a halt, worsening the situation. Reasons it might not happen. Some argue that the U.S. economy is strong enough to handle temporary trade shocks. The Federal Reserve could step in with interest rate cuts to keep markets stable. Trump's administration claims the long-term benefits of tariffs will outweigh short-term disruptions. The big question: what happens next? The U.S. government is standing firm on its trade policies, but the stock market is reacting negatively. What to watch? If consumer prices go up, this could turn public opinion against the tariffs. If major companies start layoffs, that would be a clear sign of trouble. If the Federal Reserve signals a rate cut, it means they expect the economy to slow down. Right now, the economy is on the edge of a major turning point. Will these trade policies help America in the long run or push it toward a recession? Follow Rethink report for the full story.